All right. Thank you guys for tuning in to our podcast for today. We're really honored to have a very special guest. His name is Alex on our trading lounge. And today we are doing this podcast exclusively with Alex as STL. And I have with me Gilbert. Gilbert, please say hi before I read out Alex's trading bio.
Yes, hello everyone. Welcome to yet another podcast with STL. And today we're having our guest Alex, who also goes under the acronym at DAX40. And he will be giving us a presentation today on how to trade using gun theory. So welcome, and I hope you enjoyed the podcast.
Yeah, and that's Alex. That's what is on Twitter. He's active on Twitter.
Yes.
All right. So Alex's trading bio. Alex was originally trained in medicine alongside medical school. He was interested in the stock market, and so he decided to teach himself and dig a little bit deeper into that matter. And then at that time, internet trading was limited. So nobody knew anything about CFDs, that is contract for difference. He decided to take the classical approach and to start with single stocks. He then graduated and started his specialization while the stock market got more interesting. And then he got an offer by a wealth management firm, which he managed 3 funds at the time, to do an internship there. After 3 months with the firm, he quit his medical career and signed his contract for his new job. Big ups for that shift, number one. Then currently he is employed at a European investment bank. He is responsible for futures and options. But for today, his presentation will cover trading an adapted gun theory in the 21st century. He will be focusing on the geometrical and mathematical aspects of that theory. That theory was developed by W.D. Gunn more than 100 years ago. He will also talk to us about long and short-term predictive charting using cycles, where the main relationship is between price and time, and that plays a very big role in the gun theory. And so he will be simplifying to us what gun theory is. He will also talk about his transition from medicine to the stock market. It's not an easy shift for anyone to do that, but the scientific background that he had helped him develop an evidence-based trading style. So his main core market is the German DAX index. And so we welcome you today, Alex.
Thank you.
Maybe you can just start off by telling us how that transition was for you from medicine to the stock market.
Yeah, so hello everybody again. I'm very pleased to talk today on my story and my journey in trading, which actually started with the medical career and ended in the institutional financial business. So as Sylvia told you already, I was trained in medicine and I worked as a doctor, started my specialization. I was always interested in economy in general. And then it was like in the late 1990s, around 2000, my interest became stronger in the stock markets because that topic was I wouldn't say new, but the new technology which came alongside with the internet, the faster internet, also here in Austria. I mean, we didn't have many possibilities to trade the market as an individual at this time. There were 2 or 3 banks which offered the possibility for private customers to trade stocks, just stocks. and they didn't even know anything about CFDs or options or whatever. Yeah, so I took that classical approach in stock trading because I was like pretty cocksure that I'm the new stock trader hero and I can do that, like, you know. And actually, I'm thankful for the first experience I had, because my very first experience in stock trading was that I took a very big loss. And that hurt. And in fact, it was good because I had two possibilities left. Either you learn how the thing works or you let it. So I decided for the first option and started to study the market. What is the stock market? How does the stock market get influenced? How do stock exchanges work? How does this electronic trading works, etc., etc., etc. Little by little, and years went by. I made that transition from classical stock trading into other products, derivatives, warrants, very slow and very careful, and also started to begin with technical charting, technical analysis, and came into that big topic as far as some mathematical aspect is concerned, and since I have that scientific background from my original profession, I was looking for some yeah, let's say a scientific trading approach, a reproducible trading approach, and in the end, I landed at the Gann theory, where the main topic is the harmonics between price and time, cycles, and geometrical patterns in general. So it wasn't that easy for me to understand at the beginning, as you can imagine. And but I dig deeper and deeper, and started to adapt those things, and I'm still adapting those things because W.D. Gann created all this stuff like 100 years ago. You cannot take that information from a 1900 something stock market to trade it one by one in the 21st century. That's impossible. Yeah, basically I invested 7 to 8 years in adapting my trading models and my systems to actually that status where I am now, and yeah, constantly improving and constantly adapting because there are always new things in this stock market. When I'm talking to colleagues, like was last week or 2 weeks ago, it was like about we saw everything in the stock market by now. No, actually not, because there's every time there will be a time where we experience new things that happen, and yeah, so pretty amazing, and I don't regret it. My transition from medicine to the stock market. Yeah, and that's where I am now.
Wonderful. So during your transition to the stock market,
Yeah.
How did your family feel about that? You leaving a career from medicine, venturing into stocks?
Actually, since my father also is a doctor, I don't have to answer that question. No, at the first time he wasn't happy at all, but he and my family in general noticed that I'm doing well, and they knew when I'm doing something or something new, I will do it correctly. And yeah, so basically, I think he knew that he will make it, his boy will make it. Yeah, and actually he was right, and I'm thankful that everybody was confident in me. And yeah. So nobody talked me out of that. There was also a pretty much shift in medicine, public health, that whole topic didn't get better at this time. So there were many changes which actually were negative for the patients, and in the last instance also for the doctors and the whole personnel. So it was a good time to switch. It made that a little bit easier.
And psychologically, let's say when you started out and you made your first major loss, did you at any point maybe rethink the choice that you had made? Maybe
Never. I don't rethink my decision in terms of the stock market. The point is, I'm also still interested in my old job. I'm still reading medical things and try to be on the edge. No, not in terms of the stock market, but you come into situations when there are, I don't know, medical issues in your family, at your friends, where you go back to your old job and start to think about those problems and try to find a solution. I had that already a few times, and actually this summer, the last time. So I was pretty much involved in my old job again, not as acting doctor, but to give his opinion and work together with other medical professionals.
All right. And so you said you took like 7 to 8 years to develop your own trading style. How was that like for you? How was it like for you? Because then people do not really understand what it takes for you to become, at least you have a solid strategy that works. How was that like for you?
I mean, it was actually a roller coaster ride, because if you do it scientifically, if you do have a scientific approach, everything takes time, because you want to prove your models, your theories, also in a statistical way, in a reproducible way. And there was the time, for example, 2007 subprime crisis, where the markets took a deep dive into 2009. And from there on, the cheap money, the easy central bank money came into the markets. Markets were flooded by that money, and actually I could throw away those theories, because it was a dynamic, never experienced dynamic in the history of the stock market then. And you start basically with zero again and start adapting again and start adapting again and you correct this and that. So it's pretty much challenging when it comes to that time periods of, let's say, the last 10 plus years. Yeah. Because of those substantially changed market dynamics.
Then I think you can talk more about the time period so that we can understand the evidence-based trading approach that you use for your trading, and you can also, if it's possible, to show us with a live chart example when you're trading the German index. It would be really nice.
Actually, can I show my my screen?
Yeah, you can share your screen.
Can you give me the option? Yes, we can do that.
So basically, the GAN theory has, I would say, three main aspects. That's the mathematical aspect I talked about. It was the main reason I decided to use that. There's a geometrical aspect, and there is also originally an astrological aspect, which I transitioned into an astronomical aspect. Third aspect is, yeah, you can question this. I adapted in that direction that I mainly use some phenomenons like eclipses or the changing of the seasons as fixed points in the year, where there is where you can start or end your cycles and use that for your calculation. So I'm for sure not using that classical astrology for the stock market. No, this is for sure not the fact. When we start with the mathematical aspects, everything in GAN is about a harmonic between time and price. So there always is a relation, or there always should be a relation between time and the price of an index. Basically, you can do that for every other instrument, but I specialized in futures and indices trading. So I would use it exclusively for that. It does say very easy example. You can project price into future when using a fixed range between the x and the y axis on your chart, which ideally represents 1 day, or you can change that 1 day, 1 point. So that's an ideal relationship. It's not that easy in shorter time frames, but the daily is basically the one to start with, and it's very easily spoken. You always look for time and price relations which are projected into the future, ideally from a major low or major high, like we have it here. I always take as example that market lows from 2009. So actually we have that German DAX index where that red GAN angles. This one is that ideal 1 point per day angle. and those angles actually show that path and projection into the future actually, and that's why I'm pretty much confident that we didn't see the high already, because when you look into that, market reversed in mid-August, just the shy of that time price line. We are well below by now, but I think chances, and that's the next thing, you always have to do a probability calculation. Chances are still better to go up one more time than fall down.
And I think we will keep understanding it as we continue. Do you have, Alex, do you have a trading philosophy that you live by? And if you do, what is that for you?
Trading philosophy. That's a very good question. No, actually not. No, because I take every day is a new trading day, and the situation changes every day. So, and I know most of the colleagues and also those big and well-known trading mentors say keep that emotions out of trading. No, it's impossible to keep them out of trading. So emotions are a very important and very big part of us humans. So it's, I won't say it's good to have them all the time, but you should hear onto your belly. So the gut feeling is not the worst feeling. So yeah. So I'm not that strict trading guy, limit order, stop loss. No, I'm not.
And what about maybe like a risk management principle that you follow when it comes to managing risk?
Yeah, sure. I have risk management, and the point is, I'm not a day trader. I'm a swing trader, and I take rather those big swings. So I actually don't use stop loss because I'm managing my risk with hedges. So I will trade futures alongside with options, and there's one time where the options are the primarily investment and the futures are the hedge, or the other way around, whereas the futures is my speculation vehicle and the options are my security hedge. So I never do it alone, and I would say at 99% of all trades I'm hedged into the longer term. And no, I'm not interested to turn my positions 5 times a day. I'm holding that positions for days, weeks, whatever. It's you get a better work-life balance because alongside my job in the bank, I won't be able to do one or the other job properly if I chase my trades like every day and open them, close them like 5 times a day. So it's on a wider horizon, and yeah, I'm always hedged.
All right. Are you able to show us how you hedge using futures, using a live chart example?
A live chart, yeah. Actually, we can go into German DAX on the shorter time frame, on the intraday 5 minutes, where we had that gap down this morning, I mean, it's not a classical Friday, but yeah, what is classical in trading? Actually broke below that low from September 20th. DAX left this gap here open, so it was widely anticipated that DAX cash index will close that gap the next days, and yeah, it happened actually overnight. Overnight, it jumped below that gap and made a lower low, mostly because news-driven things which happened overnight. So I'm not drawing those intraday GAN angles manually. I have a software for that, and actually that rising GAN sequence in white, where you see the 1-on-1 line, that the ideal angle showed up like 40 or 50 minutes after trading start, and so this will be my guide for managing those positions intraday or building up new positions intraday. Yeah.
And maybe to do with the angles, do you have particular angles that you use for your GAN lines?
The ideal angle is always the 45-degree angle. You can use that, or you have to use that at the bigger time frame, at the daily chart. But those angles, those classical GAN angles, like 45 and everything between 90 and 45, you cannot use them intraday on the short on the short term. So that's one thing, one big topic, and one big thing I had to adapt on my journey. But that 45 1 point by day is still valid for the bigger time frame, the daily time frame. Yes.
And when you're hedging with options, with options contracts, you normally take a similar period of time, the expiry time for the options. Is it similar to your futures contracts? Or
yeah, it's similar, and but there have been situations where I rolled them into the next contract or option series, but most of the time those trades are finished before expiration. So I'm not that fan to let contracts expire. It's also very uncommon from or at my day job from the institutional side. So you know, I'm always looking with one eye to the big boys and how they do their orders, and yeah.
What charting platform do you use?
TradingView. That's the TradingView platform. Yeah.
Do you think there is an advantage in having something like the Bloomberg terminal or Reuters icon and being able to identify maybe where supply and demand is?
Actually, I'm using Bloomberg and I'm using Reuters in the company. The only advantage is that very wide variety of economical data. When you want to create some sophisticated chart or compare economic data with index data, whatever, yeah, we have to use those things because we doing our trades from those platforms. But for an individual, there's absolutely no advantage. It's very much expensive, and you cannot use that variety of possibilities and functions as an individual, and you also don't have to use that. So for me, the most important thing is to, speaking as a private person now, to get a good charting platform like TradingView is, in my opinion. I tried many, but I'm sticking with TradingView since 3 or 5 years to get accurate data in terms of data from the stock exchanges, and to also have that real-time data available. So that's a pretty good investment for everybody, I think. I don't use, or I never used indications or the charts from CFD brokers, etc., because they are simply not accurate. If you want to trade that market or any market, you have to get sure that you have the proper data. And those feeds are good, are not that expensive, and basically worth their money.
All right, that's really interesting. And how, because your trading style, from what I'm hearing, it's heavily reliant on data. How do you go back in time when you're doing, say, back tests for your trading system? How far back do you normally go, if you do? And what would you advise people to do when they're doing back tests?
Backtesting in my situation is actually, again, a pretty, statistical and mathematical thing. But on the whole, I can say it makes sense alongside those mathematical and statistical aspects to compare simple chart patterns. How did that index act when it made another high and, for example, didn't close on the high of the day, or whatever? You will find so many examples when going back to history. And this is also a very important point for people who begin trading the markets. They actually should learn from history. So backtesting and in general, looking for similar chart patterns in the history, that's a fact which shouldn't be neglected, because you can learn a lot for the future.
Yes. Now, when it comes to developing your system, have you incorporated other kinds of analysis into it? Is part of the strategy automated? Do you have a part that is manual? Do you also incorporate a little bit of fundamental analysis? Or is it just purely statistical based off of?
I always was a fan of classical technical analysis, but my interest, to be honest, shifted a little bit into that mathematical things where those level to buy or to sell are calculated by a formula. But I worked a very long time with classical technical analysis, where you use trend lines and channels and you know this stuff. I'm a fan of Fibonacci. That's a thing which always works. I have no idea of Elliott wave. Yeah, no idea. But you have to find your own style where you are comfortable with. So it's always good to have an alternative, to have an second look to other methods, but stick to your main method and your main system.
Right, and then maybe you can also touch more on the Fibonacci ratios now that you're a fan of Fibonacci. And for any listeners who might be new, what the ratios stand for and what the implication is as a technical trader.
You know, Fibonacci is widely used either in index trading or forex trading or even in cryptos. I mean, this has also a scientific basis which goes back hundreds of years, and the Fibonacci sequence is actually a natural sequence which you can basically meet everywhere in human life. But the most important thing is, I'm not saying markets turn on those points because they have to because of Fibonacci numbers. The point is, it's simply a self-fulfilling prophecy. It's used by so many people, so you will experience those situations where a market turns like on the 61.8 Fibonacci retracement, not because it's there, but because everyone looks at that. So, I mean, it's a, you know, a highly individual thing. It's a self-fulfilling prophecy unto a certain point, but whatever works, yeah. And Fibonacci is one of the few things which actually have a good ratio, and they work pretty good. For example, when you measure from a major low or major high into a projected target, you have your levels where you can, for example, reduce your trades or double up your positions, whatever. So it's a good tool. I like it.
And maybe what influenced your choice of DAX, trading DAX, and over other indices, because there are other indices in Europe, especially as a European trader. What led you towards specializing in the DAX? And what do you think is the importance of specialization, taking one particular market and specializing in that market to perfect your trading?
Yeah, I can answer that question very easily. At that time where I started trading, there was no chance to trade an American stock market. So I had to stick with Europe. That came later, like 1 or 2 years later. I wasn't. I'm from Austria, Europe, but I'm not trading the Austrian index because the market is far too small. So I looked to our neighbors, that's Germany, and that's a pretty well pretty well functioning market with a good capitalization and also pretty volatile instrument. So, but the main reason is because I didn't have another option at that time. So I stick to DAX, and I'm staying with her. It's always a she for me. The index, it's a female. So yeah, it's my wife actually.
All right. And maybe on the trading bio, you had mentioned that you will talk more to us about the long and short-term predictive charting cycles.
Mhm.
But price and time play a big role in your trading. Maybe you can touch more on that.
Mhm. Yeah, that's not a very good example, but it should work. That's for the Dow Jones index. What I have to say is that I'm not actively trading the American market, but sometimes the US market, American market is the reference market for everything. So DAX index is the little sister of Dow Jones and S&P. And when I'm doing my calculations, I'm also doing them for the US markets, which probably or most of the time take the lead in the timing. So I talked about cycles before and how to measure cycles and how long those cycles should be. And I also brought you the example of solar eclipses or lunar eclipses, or as start or end of cycles to count. So it's pretty much more accurate to see that on the long term in the leading market, in the US market. So I'm using that data and I transfer it to German DAX index. There are some important numbers when it comes to again, like 90, 180, 270, and 360. And you could pretty quickly notice the 360 thing. It's like 360 degrees of a circle. So it's all about doing a full rotation from the 0 point to the 360 point. If you imagine that circle now, and you can calculate it also with calendar days or trading days, where which means that I'm using that 90-day cycle or 180-day cycle, either trading days or calendar days, to see any change of trend, or the index makes another high or low in that time frame. Yeah, so this is also very much for the long time, and I'm using those projected and calculated long time cycles to time that short time intraday things and trades. But on the whole, it's everything is based on the very long time. That's why I'm doing swing trading mainly, and I'm not so oriented on the short time frame.
All right. And when someone looks at your chart for the first time,
Mm-hmm.
and they might be a little bit intimidated, someone
Sure.
might think you're a math nerd. So is it for trading? Would you say that someone has to really be a mathematical, like you're really good at math, or what's your take on math and trading for any new trader out there? Because
No.
some people do think that they have to be gifted in math to be able to become good traders. What's your take on that?
I'm not at all good at maths, but you have to see those relations, or you can also use your chart patterns and recalculate it in your brain. It's absolutely no sophisticated thing, but you should get a feeling for the behavior of the market. Best example is when something happens like today in the morning. We start with a heavy gap down, and I know from history and because of the behavior of my core market of DAX index, that the chances are better to recover from that fresh low, which is usually made in the first trading hour, and to go to the upside for the rest of the day. That we are experiencing today again. So you don't have to be a sophisticated mathematician, but you should know those classical chart patterns. You should know where those chart technical inflection points are in the sense of open gaps, cash gaps, or whatever. You should know, like here, that's pretty much it's a well-timed decline because it was alongside the main Gann angle. Or phases like this where there is almost no volatility, and no, it doesn't have to do anything with sophisticated maths, but it's more the behavior of the index you're specializing in, and the trading style you use. So that's the two things which are actually important. You have to get your own trading style and to find out which style of trading is the best for you. You can't do it from today to tomorrow. I mean, it normally takes years.
And what about what's your view on compounding profits? And is it something that you'd advise someone to do with their capital? Is it something that you do, or do you recommend taking the profits out and diversifying that into another investment?
Actually, no. Actually, I'm taking them out. Yeah, I'm taking them out, and if I'm like ending a big swing trade, hopefully in high profit, I will take the profit out. I do not reinvest it, for sure not. There are so many possibilities to store the profit with no risk than leaving it in the stock market, especially at those times. I mean, it's a risky thing.
Mm.
All right. I think from my end, I think I have asked all the questions that I had.
Yes,
You
also
have
from my end.
Any last parting shots to us? Any trading advice from your years of trading experience? And what can you tell us as your last parting shot for today's webinar, podcast? And of course, we'd love to have you again in the future, if your time allows. And also, you can mention how people can get in touch with you if they need any trading info. Yeah.
I mean, the easiest thing to get in touch with me is via my Twitter account. I'm posting regular updates throughout the day and posting my charts. What I'm not doing is to give trading advice. I don't do it. That's the one thing is the legal thing, because I'm simply not allowed to do it from my job. And the other thing is I'm always experiencing new traders. They're new in the market and overwhelmed with that variety of instruments and leverage, etc. And I mean, what is the motivation to be in the market? To earn money, and there's quite a big portion who hopes for the big money in a relative short time frame, and they yeah, hoping to find some mentor or trading guru who leads them with signals into that profit, but that won't happen. So I mean, also in my biography, I'm a little bit self-ironic when I'm describing myself as a stock market guru, you know, that fake guru, because those are bad people to be, yeah, watch out for them. There are enough on Twitter and on the internet who want to sell you expensive trading services and take your money and be sure you won't get it back. So what is essential? To do it like I did it 15 years, 20 years ago, to start from scratch, to start from the beginning. Don't trade CFDs or do over leveraging or whatever. You have to understand that market. You have to understand how that market works. You have to understand those things, why this market is acting like it acts. So all those economic things and yeah, it's also a news thing. Read the news, read economic news. Basically, it's a whole package, but you cannot get a pro from January 21 to January 22. It needs time, and you should take your time when you're new in the market, and you have to develop your own style of trading.
All right. Thank you so much for your contribution to our trading lounge. We've been trying to get you on board since July of this year. So we're glad that we finally had you. And we'd love to host you again when your time allows.
You're
Thank
welcome.
you so much.
Thank you.
We will share this recording with you once we upload it on YouTube. And thank you so much.
Thank you again, Alex.
Thank you. Have a good day. Thank you.
Have-
Same to you.
And enjoy your weekend.
Thank you. Same to you.
All right, bye.